Yo, all right, guys. So today we're gonna be going over liquidity, which is one of the most important aspects of trading. Liquidity is what I base really like 99% of my trades on. I'm gonna clear my chart for you just so we can get just a better read of everything. So yeah, we're gonna go over liquidity and what it is, what it does, how you can use it, and all of that good stuff. So basically liquidity is like the foundation of every good trade if you want to catch a big move. So my style of trading, I don't scalp, I don't go for little quick in and out. I try to catch moves like this, like the big ass moves cuz why not? More money, right? So that's why that my strategy is easily the best because you're going for the biggest moves, and when you're getting good at like identifying these setups, it's so much easier to make more money. But oh shit, there's two squirrels fighting over there. What the fuck? It. So basically, what liquidity is resting money and resting orders, waiting to get filled to push price the opposite direction. Okay, so let's look up the actual definition of it because I like to look at textbook definitions, and then liquidity sweep is in trading is a phenomenon within the smart money concept framework that occurs when significant market players execute large volume trades to trigger the activate. Fuck that. I'm trying to make this shit simple. I don't know what that was, but so let's look at this. The market's trending up. We can see that we're going up, 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 and then we made a high, and then we shifted structure to the downside, right? So clearly, after this green candle was formed, the sellers stepped in, buyers lost control, right? Everybody's buying it up, buying it up. Buyers lost control, sellers stepped in, and boom, market structure shift. So above these highs was where orders got filled to send price down. So above prominent highs, and by prominent, I mean high time frame. 4 hour, 1 hour, even 15 minute, but I don't look at 15-minute liquidity sweeps. 4 hour and 1 hour are really the best. Daily isn't bad, but 4 hour and the 1 hour liquidity sweeps. So basically, all it is taking out a high, and by taking out, well, I'm going to show you what I mean. But I just mean tapping right above the high or right below a low, and then price rapidly shifting in the opposite direction because all of that money and all of those orders that were resting above the high or below the low just got filled. Price just hit it. You know what I'm saying? We just swept it. So now we're gonna shift structure. You feel me? So boom, we could even see it happen right here. Right? Price was trending up. We're trending up, we're trending up, we're trending up. Making green candle, we make a black candle. This black candle, actually, this black candle, this first one, is signs that okay, sellers are stepping in, the buyers are slowing down. We had this huge extension up, boom, leg down, okay, leg back up, leg down, right, leg back up, leg down. So we make a high right here. This green candle followed by a black candle is a high. What does price do after that? Let's break it down. Price after that came up, we took out the high. This is a liquidity sweep. And now we're making the move down. And then we make the move down. A liquidity sweep is mark out your highs, mark out your lows, and it's when only the wick of the candle, not the body of the candle, only the wick of the candle taps above price and then price closes below. So the body of the candle should never be above the high or below a low because that is a not a liquidity sweep. That would be more of a break of structure. So we want to see a high get created, mark it out. Price comes up, returns, revisits that high. The wick will hit it, go right above a high, or right below a low. Only the wick, and then the body will close in the opposite direction. So here we just wicked it. Notice how the body is at this line. We're not above it. We're not closing above it. We're at the line. The wick went above it. This is our liquidity sweep. All right. Right here is orders, guys. Right here, there's a bunch of orders that need to get filled right at that high. It's a bunch of money. So price came up, we hit it, took that money, and then the sellers took over. Right. And this happens all the time on so many time frames. But we're going to stay on the 4 hour because that's how I get my entry. Right. Let's try to find Another example of a liquidity sweep. I mean, this stuff happens everywhere, guys. Okay, we can see prices trending up. All right, we're trending up, we're trending up, we're trending up. We create a high, right? I'm sorry, this would be the high. Create a high. Green candle followed by a black candle is a high, and then a black candle followed by a green candle is a low, right? So let's look at this real quick. Create a high, price comes out, we sweep the high out. Notice how none of these candles are closing above this high, and then price continues down, right? The only reason this candle you could see is above the high is because look, this is at 4 a.m. If you look on the bottom of my screen, I was at 4 a.m., which is market open. So that's a little bit different. Market open, like above, sure, but then it immediately sold off. That's still a liquidity sweep in my eyes. Um, let's find some more. Let's find some more. Okay. Boom. Prominent low. Swept. Swept. The body of the candle is not below it. Just the wicks. Boom. Let's find some more. Let's find some more. Right here. 4 hour low. Liquidity sweep. Boom. Let's find some more. Let's find some more. Right? This is the greatest strategy, like the greatest like entry point to here because you could see a high time frame liquidity sweep, right? Let's just play this out real quick. Let's just say right here, boom. Okay, so you can see a high time frame liquidity sweep. Oh my god, if price wants to go back to where it was. Right here. So this was the sweep of liquidity right here. I mean, this is just a perfect trade right here, guys. This trade is just beautiful. This is the whole strategy. And I'm going to make more videos on all these confluences, but this is beautiful. We have a 4 hour liquidity sweep. When was this? I missed this. 4 hour liquidity sweep. Made a 15-minute fair value gap right here, right? So this black candle on the way down is our fair value gap. So we swept liquidity and then we inversed the fair value gap, meaning we closed above this gap, confirming we want to go higher. And then we created a new fair value gap to the upside right here. And look what price did. Sorry, right? Boom, right there. And look what price did. Came down, filled it perfectly. As soon as I'm seeing this, I'm taking my position, right? As soon as I'm seeing that, I'm seeing, okay, 4 hour liquidity sweep, inversion fair value gap, break of structure, pull back to here. That is not long position. Boom. I'm putting my stops below this fair value gap right here. Super good stop loss. And then, guys, holy shit. Like, this trade is just absolutely, absolutely perfect. You would have made. I didn't take this. I don't even know. This was in July or June. You would have made thousands and thousands. If I took this trade with my regular size, bro, I would have made thousands. Like, this is a crazy trade, right? Just because you saw on the higher time frames, we had a 4 hour liquidity sweep, right? That's all you noticed, right? You saw right here, we have a low, we swept it. Okay, we closed above. The wick, the body did not close below, right? And that's how you get your trade. That's how you get your optimal trade entry, just off of a liquidity sweep. And guys, this happens on every time frame. I hope you know. Every single time frame there's liquidity sweeps, but you just want to use the 4 hour and the 1 hour for your entries, right? And I'm not saying see liquidity sweep and enter. There's, you usually want to see three confluences, like that example I just gave you: liquidity sweep, break a structure, fair value gap. Perfect, perfect trade. Let's try to find another example of this. Okay, I mean, not the best example. Not the best example. I mean, right here, we created a hourly high, came up, green candle, black candle, swept it, boom, legs down, right? High, swept it. Notice how this candle did not, like, price tells you everything you need to know. Notice how this candle is not above this line. It's just the wick. And then we get huge legs down. Guys, this is happens every single day on every single time frame, and it's so easy to identify. Just start off, like, let's just do it live right now. Let's pick a random stock. Let's pick a random stock. I'm going to show you guys exactly how I would find liquidity sweeps. All right. Damn, where am I? Cool. High time frame. Let's go on the 4 hour. Let's go on the hourly. Right. Sometimes you gotta be able to decipher like which candle to use. These candles are not telling me much. Right. We're going sideways. Lots of doji action. So the 1 hour might tell me a little bit more. Right. See how this 1 hour is okay. Broke structure here. We pulled back. We swept out that low. Okay. We filled this fair value gap. Made legs down. Then we swept out. We created equal lows here. Boom. Leg up. Like this is telling me more. So I would want to use the hourly. Right. Where do we have highs? We have a high here, right? Green candle, black candle. We have another high right here. We have more lows. Okay, we got some lows right here. Black candle, green candle, right? Got some more lows. So these are my draws on liquidity. Now I'm not doing shit until price touches that. Until then, keep your hands on your lap. Don't do nothing because that's how you're gonna lose money, bro. Trading is about simplicity. Do less. Mark out your highs and lows. Now just sit on your hands. Trading view is great because you could set alarms, right? I could set an alert, and as soon as liquidity gets hit, my phone will notify me. So you don't even have to do too much. So mark out your 4 hour lows and highs and watch for a sweep. Watch for price to come up right above the high or right below the low, not the body close, but just wick it, and then price usually goes in the opposite direction because there's money up here. There's money down here. There's orders that want to get filled because this is a great price point to go long, and this is a great price point to go short. Now you constantly have to update your highs and lows, right? These are not going to be the same draws on liquidity forever. In fact, tomorrow they'll probably change, right? So every morning, get on the charts, mark out your daily highs and lows, or I'm sorry, 4 hour, 1 hour highs and lows. Wait for price to draw to them and just watch how it reacts and just watch, right? I got all of my experience in the market from just watching. All this knowledge I have it was just from learning through the charts. Sit down and watch the chart and just watch and see what price does. So that's liquidity. Liquidity 101. It's money, it's orders sitting above highs and below lows. And as soon as these highs or lows get taken out, it will go in the opposite direction, right? I use this rubber band example all the time, okay? We're sweeping highs up here. Sweeping highs, all it's doing is building that tension to boom, push price down. We're sweeping lows. Sweeping lows, all it's doing is building those orders to boom, send price up. It's clockwork and it happens on every time frame, guys. So be mindful of that. I take trades off liquidity almost every day, right? Like I said, 99% of the time it's going to be off liquidity because it's just, bro, I can't make this shit up, right? You guys see it yourself, right? Boom, high, swept, move down. Like this stuff just kind of just gets boring. Holy fuck, there's the biggest bee. Is that a wasp? Oh shit. Holy nah, nah. But yeah, guys. So start marking out your highs and lows. Go back, use replay mode. This button here on TradingView, you can go into replay mode. Boom. Let's go into replay mode real quick. Okay, I see a high get created. I see a green candle and a red candle. This is a high time frame high. Boom. Let's mark out the high. Now let's press play. What does price do? Swept. Boop. Minky. Easy, easy, guys. This stuff happens all the time, and that's how you're gonna catch your trades. Big ones too, big ass trades too, because you're on the high time frame. So obviously, don't see a liquidity sweep and just enter. There's more confluences that I will break down and explain to you, but that's liquidity 101, and that is how the market moves based off of liquidity, right? The market is not random; it's an algorithm, right? It follows certain procedures and steps in order to move with fluidity, right? There's equilibrium. There's all these things that need to be done for price to continue moving. So the people who think it's gambling, it really pisses me off because this stuff is strategical, right? You just need a good strategy. Um, but that's my video on liquidity. I hope that made a little bit of sense to you guys. Once again, mark at your highs. Boom. High came up, swept it. Boom. Low came down, swept it. Like this stuff is just clockwork. But yeah, now we're tapping into this fair value gap. Just watching right now, price is kind of trading within this range. So yeah, hope you guys learned a little bit about liquidity. My face is fucking huge right here. God damn. But damn, y'all, I'm gonna catch y'all, man. Safety.